With world-class expertise and local insight, Dexus creates value, not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
G'day and welcome to the COB on this Tuesday. I'm Andrew Gagan. Thanks for joining us, for watching and listening as we round out the day. Focused, of course, being on the RBA decision to leave rates on hold. We also got a read on retail trade, which was broadly unchanged too for the Australian economy. But key, of course, for markets, not just here but globally, is on what's ahead this week for so-called Liberation Day, when Donald Trump will unveil a new raft of tariffs. Well, let's take a look at where we have finished up. 0.7% higher on the CBO 200. In terms of the ASX 200, we're up around 0.9%. At one point we were touched 1% high. That just came off, but a fairly strong session in the afternoon, having fallen across the course of the morning. And just coming up with those themes of the day, well, on hold. That is where the RBA has left rates, as I mentioned there, on hold at 4.1%. Speculation, though, that it may well cut in the following meeting of May, but it's reiterating that it remains focused, obviously, on keeping inflation in check, but also, as I mentioned there, referring to those forthcoming impact of tariffs out of the US. Steady spending, retail sales figures there, they're up 0.2% month on month, which was slightly below expectations of 0.3%. And the ASX, a good day on the local market today. Bear in mind, though, of course, of where we've come from in recent sessions, given the heavy selling that we've seen, not just here, but globally. Let's check in on the sectors, those that have been moving today. All sectors finishing in the green, in fact, led by the REITs, Charter Hall among the pick of the bunch there. Other sectors that are moving, the utilities also doing well. In fact, the miners, let's go there. Just a little mix, but did overall, the material sector ending up around 1.25% higher, led by BHP, Rio and Fortescue, all the larger iron ore miners there higher. All right, let's now take a look at the top corporate stories. And home builder AV Jennings, set to be acquired by American real estate giant Proprium Capital Partners and its local development arm Avid Property Lend Lease, completing the sale of its UK construction business to Atlas. The sale completing its exit from international construction. HMC Capital will receive $150 million distribution from HMC CP Fund 1. RBC Capital Markets upgrading WiseTech to outperform, but acknowledging ongoing concerns about the independence of its board and the role of founder Richard White. WiseTech's appointment of 2 non-executive directors was a step in the right direction, it said. Bob East, the inaugural chairman of SETI, is retiring and will be succeeded by Stephen Fisher. All right, let's get across what we've seen today and more broadly in markets. Julia Lee joining us from LSEG. Julia, welcome back. Good to see you. All right, let's start with the RBA having just made its decision. Look, it did leave rates on hold as expected. Anything out of what you heard there that perhaps came as a surprise or that was different to what we heard in February?
Andrew, I think the markets were expecting the RBA to remain on hold, given that we have an election in May. In fact, the markets had only been pricing in a 12% chance that we'll see a cut this time round. It does, though, mean that the May decision is live, with the markets pricing in a 70% chance of a rate cut in May. But of course, a lot of it is going to be data driven, and the next coming month is going to be a big one in terms of data. And the key piece of data to be watching for is the first quarter inflation numbers and then the employment numbers as well. Of course, today we heard retail sales were pretty sluggish in February. We only saw a rise of 0.2% month on month. So it looks like consumers still a little bit cautious. And that's surprising given that February was also the month that we saw the first rate cut in this cycle when the RBA moved from 4.35% down to 4.1%. So I guess if you have a mortgage, the main one will be the one that we'll be watching because that decision is after the federal election.
Now, of course, the RBA is also focused on what is developing out of the States. As we look forward to Liberation Day, I don't know actually if we're looking forward to it, perhaps with some hesitation there of what we're likely to hear from Donald Trump. But as I mentioned there, the RBA referring to it, which it didn't in the previous statement from February there, talking about those policy announcements there, the impact tariffs will have on confidence globally, and saying that it will likely be amplified in the scope of as those tariffs widen and other countries take retaliatory measures. What did you make of that, and how are you seeing markets prepare, I guess, for what we're likely to hear Wednesday or Thursday morning our time?
Liberation Day is when we find out more about those tariffs, but really a lot of the information has been leaked. On Monday, we heard around the list of countries as well as policies that are seen as being detrimental to the US. So we do have a list, and of course, some of those tariffs are already in place. So for Australian companies, probably the one that impacts the most is the 25% tariffs on steel and aluminium. But of course, we'll be watching very closely not only on the US moves, but any retaliatory moves as well. And it's not just the tariffs that we're watching, but also policies that restrict trade. So that could be things like extra regulation or making it more difficult in areas of food, which is one key area that we're watching. And I'm sure Europe is watching very closely as well. So no doubt that this is going to lead to a bit more volatility. And some of that is being expressed through some of the hedging through the markets, the gold price is still being near record highs. What is surprising, though, I think, is that we haven't yet seen a flow through to inflation. So these policies are expected to be inflationary in the US. And if we have a look at price stats, which collates online price data, for the first quarter of the year, we actually haven't seen inflation moving thus far. Of course, we're pretty early in on the game, so still keeping an eye out. But for the first quarter, it does look like inflation is still relatively tame in the US. So watching those inflation numbers, the tariffs moves, and of course the retaliatory moves as well.
Julia, trade between the US and Australia is not large in the whole scheme of things, particularly given that the trade we have with China. Is it more those second order effects that we'd be wary of here in Australia, potentially the impact of tariffs on China and therefore what we're likely to see here in terms of demand from China?
Well, we know that Australia's largest exports really do centre around commodities, in particular things like iron ore, copper, gas, as well as gold. And in that, China is our largest trading partner. So watching the tariffs towards China very closely. Today, we did get a read from factory orders in China. So if we have a look at private factory orders, it was actually nice to see the 6 consecutive months where we've seen that in an expansionary phase. And we've seen that reading, the Caixin PMI read, at the highest level that we've seen in around about 4 months. Having said that, for investors, I guess they're looking at potential opportunities. And China's been one place of weakness throughout the last year in terms of economic growth rates. But if we have a look at in terms of equity market performance, if we have a look at IZZ, which is iShares China large caps ETF, that's actually up 48% in the past 52 weeks. So a lot of it is not just about the growth numbers coming through, but whether the numbers are getting better or worse and what's being priced in over the next 12 to 18 months. So the fact that we are starting to get some better numbers coming through have been good news in terms of investment returns. But of course, China is a big one, not only for the Aussie share market, but the Aussie dollar as well. So watching the Aussie dollar impact to give Australian investors a clue on how the Aussie share market might open tomorrow.
Yeah, just a quick look at the Aussie dollar at the moment. Julia, did a bit of a spike there off the back of that decision by the Reserve Bank, which perhaps was perceived as a little more hawkish than anticipated. Where are you seeing the Aussie track at the moment?
Yeah, if we have a look at risk assets, so looking at both the Aussie dollar as well as equity markets, it was nice to see that both got a bit of a kick up after that RBA rates decision. It was quite an interesting session. I mean, if we have a look at the Aussie equity markets, we did see the market flat at one stage around midday before gaining ground, and we actually finished the day gaining more than 1% with gains across the board. I mean, property was the best performing sector, so that really tells you a lot in terms of where interest rates are expected to go, because a cut in interest rates, of course, is good news for the property sector, which has large amounts of leverage. And if you have a look at the utility sector, it's quite similar in the amount of leverage that it has above the normal market sectors. So utilities and property, probably two of the most leveraged sectors on the market, and both of them doing quite well today. We have a look towards the May decision and what markets have priced in. Now pricing in a 70% chance of a cut, but just looking to see whether we do see that watered down a little bit, given that it does look like there wasn't any discussion of a rate cut in this particular meeting, but also watching whether that was not only due to external factors such as tariffs and the US moves, but also because of the domestic moves where we will see an election here.
Julia, great to get across what you're seeing in markets at the moment. Thanks for joining us from LSG. Now let's turn to our stock of the day. It was AVJennings, of course, having just mentioned there a bit earlier, that's being acquired by American real estate giant Proprium Capital, or its local development arm, which is Avid Property. To get across that, David Lane joined us from Ord Minnett and Henry Jennings from Marcus Today.
At this point in time, I wouldn't be selling into the market. I'd be holding on because, as I mentioned, the takeover offer is at 65.5 cents, and there is actually the provision for shareholders to receive a special dividend. So it'll be worthwhile, if you've been a shareholder of AVJennings for a long time, holding on to take that offer, as well as get the special dividend, so get a little bit more for the money. But yes, yet another business that'll be taken private.
Certainly, yeah, hold on for this. You're not going to get any less than 65.5 cents. It's really going to be a timing issue in terms of how long you want to wait. But given at the moment that the market is so volatile, it's probably not a bad place to hide out for the time being. If you've got them, hold them. If you haven't got them, it's really not even worth entertaining the thought of buying them.
Well, let's wrap up where we're finishing on this Tuesday with those market leaders. Healy Group among them. Chart Halls, Fisher & Paykel, Deterra. We're just hearing from Julia Lee talking about those sectors that have been under pressure of late, making a comeback today with the REITs and utilities among the best on the ASX. On the negative side, the uranium miners have come off along with the lithium miners as well. Neuren and James Hardie also on that list. Taking a look at the smaller movers there, Ecograph up 25%, Cyclopharm, Rocks, Race Oncology also along with Astral Resources, and negatively, Legacy Iron Ore has tumbled by 16%, Tower off by 10%. Well, let's catch up with what's on the list overnight to watch out for. US construction spending for February tipped to increase by 0.2%. JOLTS, the job openings there in the US for February. Big week in terms of jobs data rounded out on Friday with the non-farm payrolls. And ahead locally today, we do get building approvals for February. It's actually tipped to fall by 2%. Also, we get some commentary from RBA Assistant Governor Kent, who will be speaking. So just a recap of where we're finishing on this Tuesday. It has been a positive session, certainly making a comeback there from midday, and the CBO 200 finishing up 0.7%, whereas the ASX was close to 0.9% higher, and overall we're down about 0.4% over the past week. And if you take a look across the past 52 weeks, we're little changed after all that. That is the COB for this Tuesday. Thanks for watching and listening. We'll see you again tomorrow.